Welcome out to Trading Justice Podcast, episode 577, and I got the amazing. There really doesn't need to be an introduction of the great Pete Thomas for the Trading Justice community because we've had you on the podcast before. But for the new listeners out there, I got Pete Thomas here, ladies and gentlemen. He is the chairperson of AUSecure.com. They buy and sell gold. They are some of the best gold dealers in the business. And when you deal with people in the gold market, I've been in the gold market for a very long time, not as long as Pete. I think he was born in the gold market, but in terms of what 40, 50 years at this point now, Pete. But I'm going to tell you one thing.
My dad was in the gold pit for 40 years, and he started me as a runner when I was 13. Yep. So I've been doing this for...
So I wasn't too far off from the you were born in gold, right? That's kind of what it was. But what I've always known in the gold markets, and when you're dealing with the physical precious metals market, is to find somebody you trust. And there is absolutely nobody that I trust more in gold, silver, commodities in general, both from the physical and the metal, than Pete Thomas. In fact, if there's ever a recommendation, it's where you put your mother. And I sent my mother to Pete Thomas. That's what happens here.
Years ago, I did a bunch of stuff for your mom. She was wonderful. She's probably doubled her money now, right?
Oh, she's Pete. My mother is a cutthroat trader, a cutthroat investor. She's an absolute killer. There is no doubt about that.
No,
she will never tell me how much money she has made. She just gives me the nod. That's all fun. She does. Gives me the nod.
I forgot all about that, man. Yeah, she bought from me way back in the teens, and she's more than doubled her money now.
Oh, she bought gold from you
at like
3 or 4 different times over a 3 or 4 year time period from 2015 to 2019.
Gotcha.
And she has been extremely happy with her gold ownership. Extremely happy. And you know, Pete, that's kind of where I want to start. You know, obviously you're an expert in all things metals, but you know, our community obviously wants to hear your take on gold here. So I just want to start with gold, because gold is one of the better producing asset classes year to date in the entire marketplace, whether we're talking about oil or gold or silver or the S&P 500. You know, there's so much talk over this equity or that equity. What's Meta doing? What's Amazon doing? And I'm like, well, have you seen gold? What's gold doing here? Pete, give me just year to date, give me your thoughts, quick hit thoughts on gold analysis, and kind of we'll take it from there.
Well, let's start off, Matt, let's look at the global situation, because this is a real call to action here. If we have, for the last 26 months, every major government having its central banks buying gold, it's for a reason. Mm-hmm. And we're seeing continued erosion of fiat currencies across the board, not just in America, but around the world. I mean, think about it. We saw Argentina reduce the value of the peso there by 52%. Japan has gotten brutalized by this break. I mean, Turkey, 73% down at one point. If you own gold and you didn't have the Turkish lira at that time, you would have saved a 73% loss. So we're seeing aggressive buying, and not in small numbers. I mean, I saw in the last 16 months, China's coming in doing 13 tons a month. So on an overall standard, we are seeing people buying in big numbers. Yeah. And here's the thing, man. I know that you pay attention to the markets too. We saw a little trail off here recently, like in the last 60, 70 days. China wasn't as aggressive. You know, we watched their proxy buyers coming out of Hong Kong and going directly into the bank. But all of a sudden on Friday, they announced, oh, by the way, we increased our purchases by 40%. I went, excuse me?
Just like that, 40% increase in price in gold. I got a question on that, because the central banks are buying gold probably more so now than they have historically.
Oh,
And
yeah.
it feels like every central bank is doing that. And it almost feels like there's some marching orders at the Bank of International Settlements to buy more gold. Or do you think this is just okay? Let me clarify.
Sure.
Do you believe the central banks are buying gold in a coordinated effort discussed openly at the Bank of International Settlements, or do you believe that there is more just one central bank buying gold that forces the other central banks to buy gold, and this is just kind of a spiraling impact based on one central bank leading, or is this just in general every central bank kind of doing this?
Oh, well, let's look at actions versus what politicians are saying.
Yeah.
All right. And let me ask you something. Ask any of our viewers on this podcast. Has anyone seen China sell gold?
No.
At any time?
No.
We're talking about tonnage that they've been purchasing, and we've never seen them sell an ounce of gold since 2012.
No, they don't sell gold.
No, they don't. And and they really started. They were slow initially, and then as it moved up, then in 2017, bang, we saw them kick into gear, and they never stopped. There was always a resting order somewhere to pick up a very large amount. We're talking tonnage. And then I would see odd things like Uzbekistan coming and going, looking for a bid on 2 tons. Azerbaijan coming and buying a ton. I think what happened was that globally, bankers started looking over their shoulder at each other going, maybe this stuff that we're printing isn't quite as valuable as we thought. And our sovereign currencies aren't quite as valuable as we're pumping them up to be. And a whole lot of people started buying gold and, of course, silver. And we are seeing that now because, it just appears to me that until I see sales from banks occurring, that as far as I'm concerned, these breaks should be bought. This is just the beginning. And if you remember, when I started buying silver at $4.80 and I was on the floor, it looked the same way, baby. We started going little bit. All of a sudden, we were through $7, and I was like, wait a minute, we've almost doubled, and there isn't even an article in the newspaper. What's going on here, And it never stopped.
So I want to get your take on something. You just said that the central banks, specifically China, kind of started this in 2012, but the central banks, specifically over the last 5-6 years, have just been buying more and more and more and more. It does make me think like the central banks are trying to either protect something or change something at some point down the road. But I do think that will be a down the road conversation. But you said something that caught my eye. Gold has been doing amazingly well year to date, especially following the 2100 breakout. The 2K held throughout the first quarter, and then once it broke out, Pete, there was not a top there up until recently. But you said you feel this is just starting.
Yeah.
Expand on your thoughts there, if you don't mind.
Well, I know that all of the people that follow tackle trading are very good at their technical work, and that you support them in a lot in that. And the thing is that with looking at it now with this 11% yield, all right, that's a very serious number when you look at T-bills paying 2 or 3. All right, I mean it's hard to ignore the current numbers, right? So the question becomes, will we see higher technically? Well, we broke 2,300, which was a big support number. We got it down here, and the question now becomes, is there more to the downside? And you know what? I really don't care. I mean, if they take it down a little more, Matt, I'm going to buy more. I mean, this is to me, I see aggressive central banks buying on $100 breaks like there's no tomorrow. I mean, it was just amazing the way China came in on Friday. and they went, oh, we're down 100, we're down 200. It doesn't matter. These breaks are nothing but advantageous events, and I think that's how globally most of these people are looking at it.
I think it is too. I think there's well, number one, I think there's a lot of reasons why gold is showing its upward strength here this year. I mean, look at the debt explosions across the world, not just here in the US, but the debt explosions around the world has been historical ever since the pandemic. You have double dip inflationary situations that are reminding many people of the 1970s, and specifically, you know, the environment before we saw gold really take off from like 1977 to 1980. You're starting to see kind of that double dip inflationary situation take hold here. And so, and when you're looking at even take the GDP report this previous week there, Pete, GDP came in at 1.6%. Personal consumption within GDP was 3.4%. That shows you that growth is not exceeding the rate of inflations right now. And so that kind of leads you to some stagflation. There's a lot of arguments for gold, but I will say one thing on top of what you just said. You said, you know, if gold goes down, I will look to buy more.
Yeah,
my philosophy. You know me, Pete. I can't not see the technicals. Like that's what I see. When I pull up a chart, when I pull up an asset class, my first thing is, okay, what's the trend? What's the pattern? Where's support and resistance? What's the technical read? And typically when I'm breaking things down for our community, I usually anchor against the technical read quite a bit. And I certainly do that in gold. But my philosophy on gold is slightly different than what I see in how I break down other asset classes. When I'm breaking down like the S&P 500 right now, I'm like, all right, guys, let's wait on that double bottom. Let's wait for the breakout. Let's wait for the technical edge. Sit on your hands, do absolutely nothing. Let this play out. You know, let the correction go. And once we see those W formations, we're going to be primed, ready to rock and roll. But on gold here, my philosophy over the last few years, Pete, has really shifted to it's because sometimes I feel when I'm just breaking down the technical read, traders love that stuff, but investors miss out on it a lot. And then I don't want them to.
Exactly right. I mean, let's reiterate your point. I mean, just going over last week's numbers, today consumer confidence came out. All the wise owls in Washington, all the geniuses were going, oh, we're going to be at 104, maybe even 105. Guess what? It came out at 97. Are you kidding me? And even Janet Yellen, she comes out and she goes, oh, maybe inflation is infecting the market. I was
that was amazing to hear Janet Yellen say that today. I was shocked, Pete. I was like, Janet Yellen has been the puppet master trying to.
I'm not going to go there, but what I will point out to you is there was a major bank that went under today. Let's not forget that. There's stuff going on. We're seeing people are going, hey.
She was more cautious today in her language than she has been. And that's the point I was going to make is
I'm glad.
And very kind of, I don't want to say gaslighting the inflationary conversation and the debt conversation, but she has bypassed some of the concern that we all have regarding debt and inflation. And she was a little bit cautious today regarding both of those topics, a little bit more than what we've seen in recent history. I was a little surprised by that, but consumer confidence certainly is playing a role. So in terms of coming back to gold here, your philosophy, my philosophy is let this play out, but as it does sell off, you will start looking to add, correct?
Oh yeah, and not only will I be looking, I'm adding now. I mean, let's look at something.
You're dollar cost averaging because you have a long-term view that this thing is not done in this trend.
Oh yeah. And you know, I mean, the bottom line is the call to action is today. We just saw, let me give you an example. Silver went down 2.75% today. Is that a buying opportunity? It's a gigantic buying opportunity. And here's the nice thing about silver, as with your mom buying, you average in, you get a nice break. You break $2, $3. You don't panic and sell. You go, I'm going to average down, and that's where you should be now.
And okay, let's talk about silver and gold there, because they're both kind of trending very similar to one another right now. Gold was out producing silver. Silver's kind of taking a little bit of a lead just in recent. I know you like them both, but
yeah,
and you probably see them very similar, but there are scenarios in history where silver does play a little catch up to the leadership that gold typically does have.
Yeah,
Do
but
you see this as one of those, or is gold's strength so far above everything else right now that it really doesn't matter? It's diversifying both of them.
Well, here's the thing that's very important for of all of our viewers, is that when we're talking silver right now, the market itself has bifurcated. Before we would come in and we would buy silver bars. Somebody would come to my website, they would buy coins, they would buy bars, we would ship them out to them, and they were buying them as a precious metal investment against default, against a hedge against weakening currency. Now we're seeing 50% of the metal that's going out is going into solar cells. They have to make colloidal suspensions.
The technological industrial argument.
We're seeing the EVs consuming a lot more silver. And I just recently did a big crunch on the silver numbers. And according to my numbers, with a 64% jump in usage in solar cells alone, that we are going to run out of mined silver by 2230. There isn't going to be any more. So should I own it now? Should I be buying it now?
That's a strong demand with limited supply argument, Pete. That's the argument you want to make in the commodity space. Limited supply, strong demand. That's where you get those parabolic upward trends. I love that call out. What else are you seeing out there as we shift a little bit away from gold, a little bit away from silver? I'm sure we'll come back to gold here in a little bit, but what are you seeing out there across the board in the non-silver gold? Because when you think about the metals market, Pete, you think about the king of gold and the queen of silver, and then everything else just kind of gets put into other buckets, but they don't get the love that gold and silver gets out there.
I mean,
what do you see beyond gold and silver?
You get into the periodic chart, the noble metals, there's really only two you want to own. That's platinum and palladium. And now think about this. Palladium was at $3,000 not long ago. We're at around $1,000 right now.
$1,000 right now.
Like let's say 950, really, realistically today, because of the break. So why don't we say, if you go, and I gotta plug this, if you go to ausecure.com/Pete and you look at the report that I've written and some of the stuff that I've picked out within that diversified portfolio, I'm very strong on platinum and I'm very strong on palladium, because they both have industrial usage and they both have limited production. Remember, the yield to date on the palladium, it's dropped about 13%. So this is a buying opportunity. Anytime you see it go down, you should be jumping on metals that you want to have clean air coming out of a tailpipe, you got to have palladium. It's not an if, not a maybe. You should be using metals or buying metals that have demand. And this goes to your point earlier with silver. Absolutely.
I'm on your ausecure.com right here, and I'm reading the article that you posted very quickly, Pete. And anybody that wants to read this article, it's ausecure.com/Pete. You recommend in here a kind of a structure of a precious metals allocation,
right,
in a portfolio. And so let's say you're allocating, I'm just going to make up some numbers here, Pete, to make it easy. Let's say you're allocating $100,000 in capital into metals, right?
Right.
And you say, okay, based on these current situations, I would recommend 60% of that in gold, 20% in silver, and then split the baby on the other one with the platinum and palladium coming in at 10%.
Absolutely.
Has that changed at all recently, or is that in general how you see a standard metals portfolio?
That's how I see it now. Quite frankly, I will tell you this. My philosophy in the last 2 years, man, and really since the last show that you and I had done, has changed. And, my followers in the Middle East have really, really had a strong influence on me too. We're seeing large markets now. Used to be, they'd say, well, where do I want to be? I should have 5% gold. And then then I went up to 10%. And now I am telling people, if you don't have 20% of your assets into a hard metal, preferably a sovereign metal, which we therefore is guaranteed quality, so you don't have to worry about what it is. And we have all of those available. But what I'm saying is my numbers have changed. And within what you're holding, you should be all the way up to 20% in precious metals.
And we're talking a little bit of two things here, just to clarify for the listeners. One, and it's wrapped around in one conversation. The one conversation is your entire portfolio. Okay.
Yeah.
And the question is how much of your entire portfolio to allocate to metals. And of that allocation, what would the split of that allocation in metals be in these four metals, basically? So you first start with your allocation in metals in your portfolio, then you determine of that allocation, where do you put that in the metals? My opinion for a very, very, very long time has been 10% in gold, specifically in gold, that 10%, which would kind of, you would have it right now about 12% against the total portfolio with a 20%. With 60% of your metals in your portfolio, that would equate to about 12% of total portfolio in gold. So that's not too abnormal with where my recommendations are.
This is just remember this, guys, 60, 20, 10, 10. 60, 20, 20, 10, 10.
But it's more aggressive than what I have seen out of both you and me in history. Which tells me that you are getting even more aggressive on the allocation in the metals and mining as we are seeing this inflationary saga play out. Would that be an accurate statement?
Yeah. And all the years you've known me, I've never been this high. I'm just
you and I are very conservative on this stuff.
Yeah. Yep. But I'm looking. Let me give you an example, which is critical to silver. Okay.
Yeah.
We're looking at all silver. Right now, the demand is 1.24 billion ounces. That's what we're looking for total usage for this coming year. Right. You know how much we're going to produce? 1.17. We're going into a deficit. All right. And it goes to your point, when commodities are in deficit situations, they only have one way to go.
The demand, you got two, it's a double dip. You get the limited supply and then you get the additional demand due to the environment. And they really can create pockets of momentum that you typically do not see in the metals environment. You know, Pete, you're mentioning a couple things and you're making a strong argument for the metals, and I knew you would, and that's exactly where my head is at as well. My question to you on the silver side of the equation very quickly, Pete, is, the last time I can remember this type of environment and kind of what you're talking a little bit about was the 2009, 2010, 2011 saga in silver, when silver went from $10 to $49, outpaced gold. Gold did great too, outpaced gold in that environment a little bit, though. The GS ratio contracted a little bit there. Do you see this as a similar environment where silver may have the ability to outperform, or is it just you see this environment as on net positive for metals in general, and that way silver usually does good in that? So is it just a metals conversation in general, or is it something specifically in silver you're seeing?
Well, we're like I said, we're seeing deficits hands down
The deficits and the
in a
increasing
lot of
demand.
metals right
Yeah.
now. But the question to answer it for you is it's almost like a catch up. You know, we'll see gold pick up $100 and silver will pick up 20, 30 cents. But then the next day it'll follow, and the next day it'll follow.
Yeah.
It's more fluid than it's been, and it will, to go to your point, it will catch up gradually in little bitty bites versus these huge chunks where I mean, honestly, Matt, we're seeing $40 trading days in gold like it's normal now.
Yeah.
And I mean, before it was $3, $4, $5. Now it's like $40, $50. I mean,
If gold's up or down $10, it's not even moving yet.
Right, exactly.
Like, it hasn't even woke up yet. Like,
yeah,
it's been moving. Very quickly before we move on from the gold and silver conversation, from a technical perspective, Pete, and I know you kind of anchor more on the longer term side, but on the technical side, you do got some compelling charts setting up on both gold and silver, and you got momentum in trend here. What we're seeing is just a little bit of pullback analysis is all we're really seeing on those long-term charts. This is not a sign of weakness at all on the long-term charts. Look at that 9 EMA right underneath that gold chart. Silver looks pretty stinking good here. And the last thing on the gold and silver, and then we can move on to some other conversations very quickly, Pete.
sure.
You are looking at the long-term charts here. Silver's all-time high is $49, and that was set forth in the 2011 post subprime market meltdown. Gold's all-time high is currently right now, right?
Right.
Silver has this level right here at $30 that if you want to anchor against a number, I like the 26 handle too. The pullback to 26 is really, really, really solid if you're looking to buy the dip type situation. But if you do miss out on that dip type situation, because sometimes you got to be a little bit quicker on that, keep an eye on $30. Anything of any breakout here of $30, you enter into a really good momentum.
I like that. I like that analogy because I remember when I was on the floor and we took out 30 and we went to 32 so fast it was just blinding.
Yeah.
And after that, that was like 30 was like the floor all of a sudden.
I've
said, and I'll tell you something. I was trading December then, and I sold a 50 lot to a guy at $50. He stood up and bid 50 for 50, and I said sold. I hit him. I had off of my deck, so I know we traded.
You sold
50.
the back holder?
Yeah, I sold the back holder, and I'll tell you, I was getting out of a cab in London, going to lecture at Cambridge, and it was hysterical because the guy in the cab was one of the presenters, and he looked at me and he goes, "You're the guy that sold me the 50 lot at 50." And I just laughed and I go, "You bought the high?" And he said, "Yeah."
Me. You bought the tick. Yep.
So
you should have said, hey, blame Jamie Dimon. He's the one who made that deal with the Chicago Merc anyways. I had to get that in, Pete.
Let's get to your point as far as what I think one of the things that on the chart wise is velocity. V is almost everything now. And when things start to gather legs, because this market has changed so much from what our old school, which is do the charts, do the homework. Now we got AI and we've got algos going, and they start to see this stuff moving, and they don't know what they're buying. I mean, it could be avocados for all they care. They're just they follow the velocity, and that's what a lot of the programs are doing. So the market has kind of changed in that once the direction starts, all of these automated purchasing programs jump on, and it's so hard to catch it that the philosophy of just saying now's the time, now's the break.
And I love that in commodities. I absolutely love that in commodities because, Pete, we kind of jokingly at Tackle say it's the Mountain Dew markets where everything is taken to the radical extreme.
Yeah.
And that's basically, that's our way of describing exactly what you just said. It's once those algos, once the day traders align with the swing traders, those algos timeframes are aligned, and momentum can really propel price action in those environments. And when you're looking at, these, kind of the commodity spaces, and you got silver setting on the 9 EMA, that in a momentum uptrend with a pullback scenario sitting on the 9 EMA, which is a major short-term catalyst for any instrument out there, I do think you got to be have a little bit of a longer term feel of, hey, let's park some money, let's dollar cost average. We don't need to see, and I say this all the time at Tackle, Pete, when you have a long-term view of a company, of an asset class, of a commodity, of a currency, of a crypto, it doesn't really matter. When you have a long-term opinion, don't try to pinpoint your entry like you're a market assassin. Like you don't need to get the exact number. You just need to get in the zone. And as long as you're in the zone, you're perfectly fine when you're thinking long term. And that's how I see silver right now. That's how I see gold right now. That's how I see the metals in the mining space in general. I want to come back to platinum and palladium very quickly, though, Pete, because unlike silver and gold, which has just been doing really, really, really good, platinum hasn't got that pickup. Palladium hasn't got that pickup yet. Both of them kind of hovering in some degree of neutrality right now, especially on platinum. Palladium has came down quite a bit, and now a little bit of short-term reversal here. Pete, when I look at all these four asset classes, the main metals, you got gold, which is the linchpin, the kingpin of everything. You got silver, which is the giddy up and go, go, go. But I look at palladium specifically here, and technically it stands out to me, Pete, because it's going through bottoming formations. Do you see an opportunity here on the palladium side?
Let's just point to something, right? Everybody's, we're all green. This is it. I mean, everybody's got to own an electric car. And oh, by the way, we're going to hydrogen. And in Dubai is aggressively going into hydrogen. Japan is aggressively going into hydrogen. Guess what? You can't make the hydrogen without palladium. Somebody is going to wake up, unfortunately, before I've been able to accumulate enough of it myself. But let me tell you something. Palladium at below $1,000 at any time, you should be palms in, a buyer, and putting it away. It's not even
just parking money and waiting for the pop.
Exactly
kind of what your philosophy is.
Yeah, and we have a brand new source of demand coming into the market, and we've had a major break due to the fact that people are saying, hey, we're going to be going electric, and we're going to do this, and we're going to do that. But you still need these metals in order to do it. All of these metals are transducers and have functional usage within the keyboards that they're going to be doing, the electrical passage for their electric cars. The average electric car needs a lot of silver. So, to cut it short and get back to the noble metals, get in there and buy them below 1,000 anytime you see them in that area. Get aggressive with silver, absolutely today, if nothing else. A 2.7% break on a daily. I mean, any type of retracement, you're doing well. And as far as gold goes, I mean, I just think you should be putting it in your portfolio on a regular basis.
I say this all the time on gold. I won't even break down the daily chart on gold any longer, Pete, because I just feel like people are going to miss out on the reason why you invest in gold in the first place. And that's not to pinpoint your accuracy on making money today. It's to protect all the money you've made in your life tomorrow.
Yeah.
So
which is why I've gone from 10 to 20. Because if this thing falls apart,
I'd like to
the
call
assets that you have will not be made up by 5%. or
I
10%.
like that call out. 20%
If you've got
allocated in metals makes
20% in
sense.
there and it quadruples or triples, you might be even, but you'll be one of the few guys that is.
Yeah. I look at this, and let me stay on Palladium very quickly here. By the way, I really like the 60-20-10-10 split, 20% design in a portfolio. I think that's a really good allocation. I'm kind of stuck on this Palladium chart here, Pete, because the more I'm thinking about it, the more it stands out to me.
Yeah.
For pretty much 2010, 11, 12, 13, 14, 15, 16 going into 17, Palladium never budged above $900. Like never did that. I remember having you on the podcast when it did break out of that $900, and you had a call to buy it at that point.
Right.
And it had a historic move over the next few years.
I'll tell you what, I remember that you and I had a discussion, and I said to you, this is where you should be. You should be accumulating some of this. And you asked why, and I gave you the reasons why I felt it. And every time I saw you after that, you were like going, "Oh my God, how did you?" I mean,
because it was not part of the conversation, Pete. Like legitimately, Palladium had not done a thing for 7 years. And you're on the pod saying, "Hey, let's buy Palladium," and I'm like, it's kind of out of nowhere. Okay, let's get up and go. And then all of a sudden, Palladium breaks out and it's running, and I'm like, "Oh my God, he knew something." He knew something,
and it tripled. But thing is,
my point here, Pete, is you're at that same level.
Yeah,
you're at that same level, and now instead of acting as a resistance level, now it's acting as a support level.
That's interesting. Yeah,
that is really, really good. It's a concept I call the principle of polarity, where an old resistance level like Palladium had at $900 for years and years and years, and it doesn't budge that. Once you break out of that level and you eventually come and retest it, that now acts as that new level of support. And so I kind of like the storyline playing out, and I like your I don't want to nitpick any of your call outs here because I'm 100% on board. I just want to add to it a little bit. $1,100 stands out to me as a resistance level here on Palladium. It's a double top at 1,100. You got the 200 daily moving average right there as well. That played a role a little bit, acting as resistance. And so I love your call out to add, to start kind of trickling into a position. But if it ever breaks 1,100, you could get 1,250 extremely quick. And so keep an eye on that level. That's all I wanted to add on that.
You get in at 9, and it's so if you decide that you can't sit any longer and you want to pitch it at 12 and a half, roll it into silver.
Heavens, yes. Heavens.
That's all. I'll do the swap for you. Call me.
Can I ask you a question?
Yeah.
When did you shift your philosophy on the allocation? And two, why did you shift it specifically? I think I know the reason, but I'd like to hear it.
Well, I'm a pretty much a citizen of the world, and globally, I'm traveling a lot, and I'm in a lot of different nations, and I saw currencies taking gigantic hits, and with no coverage. I mean, I was just startled. I mean, you go to Turkey and something's 75% cheaper against your dollar, and you're just like, oh my God, and nobody's talking about it. And I said to myself, if it's happening here, if it's happening in Japan, I said, I have to kick this number up for the protection of my clients, for the people that follow me. I just said, look, I'm seeing big things happening on a global basis. And if it happens, God forbid here, let's get you fully protected. And that number, I think, is where where you're not going to have a profit, but you're going to have something. Okay.
Yeah. It's a great number because the 10% number is a really good protection number. You start adding, you add more to it. It becomes a little bit more of an out position against the portfolio, which means you have an opinion you're playing out there.
Right.
I personally really like it quite a bit. I love the additional allocation in the metals market because I don't see this stopping, Pete. And what you're talking about on the currency side, I'll just paint you a scenario here, Pete. What you're discussing is the pain the dollar puts on the other currencies around the world when they start going through a normalization of interest rates.
Yep.
But what occurs in that environment if the Fed, if the Central Bank of the United States has to start raising interest rates again in a double dip inflationary situation? That would put damning pressure on foreign currencies across the board. You can talk about the Japanese yen as a catalyst currency out there, but the currencies you're talking about are the currencies that I would be concerned about, and what would really drive even more and more money into the precious metals environment is if you start getting an Asian currency crisis, similar to what we got in the late 90s. If you start to see currencies start to devalue across the board due to, appreciation against the United States dollar, those BRIC type currencies and the international currencies could devalue quite aggressively in that environment. So I could see scenarios that are very damning on the currency side of it, which would obviously be very pro gold and pro commodities in general.
Yeah, and I think that it's important that you mentioned BRICS. We're seeing it come in aggressively, and we have 7 major players and probably 25 or 30 minor players in there. And what are they doing? They're buying gold. That it's not an if, it's not a maybe. They want to add legitimacy to their currency, and they're doing it by adding hard assets.
All right, let's shift topics just quickly here, Pete. I want to get your take on storing of precious metals, specifically on the gold, silver, palladium, platinum side. I know you have, you're the chairman of AUSecure.com. You do a lot of buying and selling gold. You're a commodity dealer in general, one of the most trusted out there, the most trusted by us at Tackle Trading. There's no doubt about that. Pete, in terms of the storing of physical metals, that is something that for you and me and a lot of other people, that's another day that ends in Y. But for a lot of people in America, they get very concerned when their money, and that's how they see their investments, is they don't have access to it, right? They like access to their currency. They like they like to be liquid in that. Let's talk a little bit about storing precious metals versus investing in the digital side of the equation.
Right.
Do you recommend storing of the 20% allocation? Is that a combination of physical / digital? Is that the net portfolio allocation?
No, stay away from the digital. Let's here's the problem with digital. I mean, I have people coming to me all the time going, "Oh, we want you to build up a vault and store for us and put it in." And I go, "Okay, is it going to be on blockchain? Are the customers going to have transparency and see your metals there and all that?" And at the end of the day, I have not seen the digital gold storage work. It's very, very complex. And as far as storage goes of physical, I'm going to give you some real quick ABC type rules. All right. Number 1 is don't throw your money into an allocated pool. In other words, I come in and I buy.
You don't want to be in a fund.
Yeah, exactly. If you want to own physical gold and you want to take gold, silver bars, whatever, coins, and you want them put into an account with your name on it. Okay. Yeah. You do not want it going to ABC company in the middle of somewhere and with the hopes that it's in that pool. Yeah. You want to hold it in your name and you want to have it in a secure vault, and you want a vault that has been in business for multiple years if you can. Yeah. And so
if you can't get the Swiss, there's some in Chicago and New York.
Well, the current, geographical allocation has been a big topic, and I just did a big lecture on it not long ago. But right now, we could store for you in Chicago, we could store for you in Dubai, we could store for you offshore with no problem.
Let's say I had somebody at Tackle Trading, they want to call up P and be like, "Hey, I want to buy some gold. I want you to store it."
Right.
They can have they have the flexibility to select where they would like to store that gold in what vault, correct?
Yep. Show up with your
Full
call in
transparency,
advance, show up with your passport, and you can pick up your medal as well. Not a problem.
Awesome. And why do you think then people have a little bit of a difficult time getting over we're not storing my gold, my currency, whatever it is, right, in my house, right? Why is it important to store it in a vault secondarily, in your estimation?
Well, it's just a matter of security. Bottom line is that, I mean, let me give an example. Seattle told its people that the average 911 call was going to be 32 minutes to respond to. Okay.
That's it, huh?
Just a burglar. They might as well put a sign out, So
there's a few things that can happen in 32 minutes there, Pete.
Yeah, I mean, you can build a house.
Yeah. I'm willing to bet trying to build a train station in 32 minutes.
Oh, man. I mean, so the thing is that it depends on your situation. If you're going to have a lot of your assets located in one place, you want, some of those large guys in bulletproof vests with shotguns and high fences and vaults. And the most important thing is that they have a very large insurance policy to protect the assets that are in their vaults.
To make sure that you're protected, everything you own is protected 100%.
Right. Absolutely.
Pete, you've been selling metals to investors for literally 40 years. You've been storing it for them for that long as well. That is why you are the trusted individual that we at Tackle Trading and the Trading Justice Podcast, why we go to you, because you are that trusted name in the gold market. And if you're looking for gold ownership, guys, there is nobody I would go to more than Pete. Pete, again, where do I send my mom? I send my mom to Pete. AUsecure.com is Pete's website to find any of those metals needs. Pete, I want to shift topics very quickly, coming back to gold very quickly. I know we started with it. I want to come back to it. Both you and I believe this is not the end conclusion of the gold saga. We both believe this is shockingly, for a 6,000-year-old instrument, we believe this is the beginning of the saga. Can you talk about that philosophy? Because sometimes after a trend such as we have seen in gold, people make the false assumption that they missed out, that it's already over, that they missed out on the opportunity, that if they were just to be around when it was breaking out at 2100, I could go back in time and I could do it all right. Talk to the community about why that's such a damning behavioralism.
Well, I mean, it's instinctual. Okay,
we all have it, by the way.
People, do I want to admit that I was wrong, or I didn't move quickly, or I saw something and I didn't ascertain the value of it at that time and move correctly? Of course you don't. It's just a natural reaction. And the thing is that the difference is dollar cost averaging, Matt. I mean, that's really what we're getting down to. If you come to AUsecure and buy a roll of silver every month, you get your paycheck, you buy a roll of silver. You buy it, and you just add on, and you just continuously put a little bit away. Then you're not missing any moves. If it goes down, you add on. If it goes up, you add on, and then you're out of that mindset of pursuing the product or waiting for the dip. Because a lot of times, especially with silver, once we broke out of the teens, that was it. Didn't go back.
If you're not in front of the market, actively engaged with the market, sometimes it can be hard to catch. There's no doubt, especially in the world of algorithms. It can be extremely hard to catch. And so when you do have a long-term purview, go ahead, Pete.
people have jobs. They have
They
kids.
do. They got lives. Yes. Yes.
You know?
Yes.
So, I mean, it's just they don't have the time to be a professional trader. And so that's just say, okay, I don't have the opportunity to sit in front of a screen all day. COVID's gone. I'm going to the office now, and I'm just gonna, I should be looking for like a gigantic break like we had today and say, hey, I'm just gonna call up and buy some metal, and that should be it,
I love that mentality, Pete, especially when you're talking long term here.
Yeah.
Because when I deal with a lot of short-term traders, there's no doubt about that. We focus on technical analysis and pinpointing accuracy, but that's all day trading, swing trading. That's short-term trading. When you have a long-term view of something, I give the analogy of it's not man-to-man defense. We're in the NBA playoffs right now. It's not man-to-man defense, it's zone defense. As long as you're in the zone, you're perfectly good. And I love that concept of, you know what? Yeah, I have an opinion on these long-term assets, and every single month I take a little bit of my money and I park it in these long-term assets, because isn't that what a retirement account does? I mean, isn't that literally the design of every single retirement account in America? Is the corporation will take a portion of your money and they will put it into a 401k and they call it your retirement account. And all we're suggesting is you take that portion yourself and you put it in asset classes that you have a long-term view that would help protect everything you're working for. And that is gold and silver. Pete, off the beaten path here, we've talked a lot about gold, silver, platinum, palladium. Really like that bottoming out of the palladium chart. I'll be breaking that one down in a halftime report near you coming soon. But in terms of off the beaten path here, Pete, let's finish the podcast here talking about non-core metals. Do you have anything on the non-core side that you're seeing out there outside of the four core metals?
I mean, the other than, I've been a monster on buying copper at 350 and 325. And that's just, I mean, bottom line is that demand keeps going up. Think about let me just give you a quick example and we'll go from there, Matt. It's electric car uses between 90 to 110 pounds of copper. Your average automobile is 17 to 22 pounds of copper. Mm-hmm. So, and all of the stuff, phones, keyboards, computers, everything, we're seeing demand for any metal that can transduce electricity quickly. And that's really the only one that I watch, and I only buy it when it gets into areas of long-term support.
So you buy copper only when you get your number. And your number
right.
is in the mid-threes.
And I don't buy physical because you have to trade it by the ton in order to make it worthwhile. And so I'll go into the futures market and do it.
Love it. Love it. Love it. Pete, thank you so much for coming on the pod here today and spending your time with our community and giving us your wise words of wisdom. And I do mean wise words of wisdom. You've forgotten more about the commodity market and specifically the metals market than I know, Pete. And I feel like I know a few things when it comes to the metals.
Oh, yeah.
But
you're
the king, brother.
Yeah.
You're the king. Pete, where can people find you? Where can they get your information? Where can they buy some gold from you when they're looking to get some metals?
Hey, bottom line is come on over to ausecure.com/Pete. You'll see my latest reports. You'll see my recommendations. You can pop right in there, make an order online, put your credit card in there, and you can trade your plastic for real money. And we'll be happy to ship it to you.
Love it, Pete. And once again, you can, Pete is the chairperson of ausecure.com. That's where you can find his information. And if you're looking for any gold, silver, platinum, palladium needs, if you're looking for him to ship it to you or for him to store it for you, he does it both. And they are some of the best in the business. Pete, it is always a pleasure to have you on the podcast, my friend. We love you in the Trading Justice podcast. So thank you so much, Pete. Appreciate you. With that said, I hope everybody has a wonderful, wonderful rest of your week. And if you need anything from Tackle Trading, the sponsor of the Trading Justice podcast, you can hit us up at team@tackletrading.com, or you could always go to tackletrading.com and sign up for a free 15-day free trial of the Tackle Trading Pro membership, which will help you, teach you how to manage everything you buy from Pete. That's what we do, Pete. We teach people how to navigate those technical conversations, those fundamental conversations. So do them both. We love them both. With that said, everybody have a wonderful rest of your day.
All righty, man. Thank you and goodbye.